So what exactly is an ETF?
That's what I want to know.
An exchange traded fund, or ETF, is a type of investment fund that combines the features of both stocks and mutual funds.
Exactly. It's the best of both worlds, so...
Think of it as nothing more than a basket of different assets bundled together and traded on the stock exchange, just like an individual stock.
You do make it sound so simple.
The reason why I like these sorts of trading funds is simply because they are all you need. The method of capturing the entirety of a market that they achieve, rather than an individual company, is, if you are going to do nothing else, more than enough.
This is great news. Okay, good.
Is it boring? Yeah. Is it sexy? No. But will it help you build wealth? Absolutely.
That's all I needed to know.
What sets ETFs apart is their structure and their flexibility. Unlike traditional mutual funds, ETFs are traded on the stock exchange throughout the day, just like any other stock would be. This means you can buy and sell them as the market prices go up and down in real time.
That's good to know. Good to know.
Now here's the cool part. ETFs can track various assets. This can be stocks, bonds, commodities, it can even now be cryptocurrencies. So when you buy shares of an ETF, you're essentially buying a piece of that diversified basket that the ETF is holding.
That analysis is smart.
Spreading your investment across multiple assets at once. It is an incredibly good amount of diversification to achieve immediately. Why are ETFs gaining so much attention?
Everyone is talking about it.
Well, there are a few reasons. First, they offer diversification like I said. Instead of putting all your eggs in one basket, ETFs allow you to invest in a broad range of assets, reducing your risk. Second, they are cost effective. They often have lower expense ratios compared to actively managed mutual funds, making them an attractive option for cost-conscious investors.
The important thing is we have severely cut costs.
So how can you use ETFs in your investment strategy? Well, one common use is for passive investing. If you want to track a specific market index, something like the S&P 500, which I'm sure you've heard of, then you can find an ETF that mirrors its performance. And this will allow you to periodically purchase a set amount, whether that's by number of shares or by the amount you can afford to invest, and just dollar cost average yourself as you slowly accrue a larger holding in the underlying index, in that case, the S&P 500.
Sounds like a plan.
Alternatively, you can use ETFs to target specific sectors, whether you want to look at specific industries or regions. That's a flexibility afforded to you, and that allows you to customize your portfolio based on your investment goals and beliefs. As the great man behind Vanguard once said, don't look for the needle in the haystack, just buy the haystack.
Now you're making sense. Good night.